First up, let's put the spotlight on the oil market. That one is seeing an uptick of 0.2% in trade today. Brent crude at the moment is trading near $65.4 per barrel mark. Remember, crude is gaining for the third consecutive day today. And US President Donald Trump yesterday said that he would hold off on imposing tariffs on Europe, and a framework of a potential deal had already been reached. This is one of the main reasons which continues to weigh heavy on the oil market. In fact, not just oil, precious metals are also in focus on the back of that. Let's also talk about gold then. Precious metal gold is trading at $4,800 per ounce mark. It is down 0.5% today, and it has snapped its 3-day gaining streak. Silver, meanwhile, is trading at 93.7. Look at the kind of up move that we have seen over the last few trading sessions. And despite the comments that came in from Trump, silver is sitting with gains of 0.7%. It ended 1.5% lower in trade yesterday. Latest comments from US President Donald Trump weighed heavy on the precious metals market because the fact that US will not levy tariffs on Europe means that safe haven demand is falling, and that is the reason we have seen some bit of cool off in the precious metals market over the last few trading sessions. But despite that, remember, gold and silver are still up 11 to 20% this year so far in just 22 days of this calendar year. And to discuss this in greater detail, we are now joined by Mr. Chintan Harya, Principal Investment Strategy at ICICI Prudential AMC. Mr. Harya, afternoon, and thanks so much for joining us here on ET Now. Since we were just talking about gold and silver, let's start off with that. Especially gold, despite the volatility that we have seen in the global market on account of Trump tantrums, it is still up, what, about 11%, I guess, this year so far in just the 22 days of this calendar year. What do you make of this, and where do you think gold is headed in the near term?
So maybe about a couple of years back, when we would speak of gold and silver, it was gold and silver and everything else. Today, it is only about gold and silver, and most people are focusing only on gold and silver, as shown by even the flows of mutual funds. If you look at the month of December in terms of flows, almost 15,000, 16,000 crores came into gold and silver. So obviously, there is let's say, a flow effect which is happening in gold and silver across the world, which is led by the past performance. And it's no surprise that if in 1 year silver has gone up by 150%, gold has gone up by more than 80%. 2025 was the best year after 1979, 1980. So we are talking of a 45-year breakout in terms of the performance. It is going to attract investors. The only word of caution is that we are at a scenario where financial markets are overtaking the physical markets, and that's explaining the financial markets being at a very high premium in terms of the premium that the financial products are trading for the actual physical delivery price. So a word of caution for investors, but otherwise from a strategic perspective, gold, if we speak of, and let's stick the argument only for gold, there is a clear-cut case for gold revaluation because one, the trust on dollar as a currency has gone down over the last 2-3 years in general because of the high debt that US had. And also the fact that gold hadn't performed for almost 10-12 years, and now that in the last 3-4 years it has performed. As part of the financial investments of investors, it had become a very small quantum, and now it is basically being added upon. So even today, if I look at an average investor's allocation to gold, it wouldn't be more than 5 to 10%. And that's where gold has a long runway in terms of a financial fit for investors. Whether it should be done now or over a period of time, that only time will tell. But clearly right now, the focus should be on managing risk.
Okay, I understand that the focus in the short term should be on managing risk. But Mr. Harya, if you can take us through your target price, what is the target price that you have, say, for FY26 end, or rather calendar year 2026 end, and for the next 2 years?
So as asset management companies, of course, we can't have targets, but obviously it is to deal with the fact that if there is more money printing which is going to happen, if interest rates are going to come down in US, and both of these look likely, then we can see gold obviously going, as far as the trend is concerned, on a higher trajectory. While it is difficult to predict how much higher, because we've already seen a large part of whatever the news could come to drive gold behind us in terms of interest rate cuts. It's well known to the market. Liquidity abundancy or more printing of money, it is well known to the market. Whatever uncertainty we could think of in terms of wars or the geopolitical stress, that is also probably known to market. And one thing we must always remember in market, that if the news is known to the market, it factors into the price much before the actual news comes. So today gold at $4,800 probably is pricing in a lot. Doesn't mean it can't go up, just that the pace of growth will probably be slower
Correct.
and you need to be ready for volatility.
Okay, should be ready for volatility, and the pace could be slower, but we will still see some more upside. That's the word coming in. Mr. Haria, unfortunately, we are completely out of time, but we'll touch base with you again very soon, and apologies for that short interaction. On that note, we need to slip into a very short break. More news and updates will continue on the other side.